Thank you for taking a quick peek at Monica Stanley, realtor at Pargin Realty ERA. I'm going to go over a little bit about what a short sale is. Now, a short sale does not mean the sale gets done in a quick amount of time. A short sale is asking for the lien holders or the banks or the mortgage companies to take a note short of what is owed to them. For example, let's say a person owes $200,000 on their home. Now their home is only currently worth about $150,000, but they're not going to be able to get $200,000 what they still owe. So they're going to ask the banks to take a note short of what is owed, and they're going to do this because they might be in some sort of hardship where the banks may agree to do it and they may not. And even if they do or do not agree, they would still be out there flooding the market, and you can see a home that could be a short sale and they have it offered at $150,000, and nobody says, no, I don't want to pay what current market value is. So they would probably lower the price until they get a bite. So the price can be listed as low as $100,000, and someone says, wow, that's a good deal. I don't want to pay $150,000, but I'll pay $100,000. So they go ahead and they know that the wait can be anywhere from 6 months to a year. Nobody can really tell you when the banks will get back to you because it's not it's not known. Every bank is different and it depends on who you're dealing with. So you have a buyer that makes an offer for $100,000 and you have it on the market for $100,000. Now the buyer ends up waiting around, they end up waiting around 8 months and they don't hear back from the bank or banks, so the buyers decide to walk. So they lower the price again to $90,000, and then another buyer comes into play and they say, yeah, that's a deal. I'll buy it for $1,000. The banks take the months to give a response, and the banks will say, no, we don't want $90,000, we're owed $200,000, so we'll accept $200,000. And so you won't have an agreement because the seller can't sell it for $200 if they can't get a mortgage or a appraisal company to appraise it for $200,000. So it's kind of like a hit and a miss with short sales. If you can get it done, they could be great deals for buyers, and they could be great deals for sellers because you won't go into foreclosure. You agree to take a note of short of what's owed for the banks in lieu of a foreclosure, so you're not taking as large of a credit dump as a foreclosure would be, and you do get to have the house off of your hands. Now there are tax things that you should go over with your tax accountants of possible penalties for doing so. Also, if the buyer gets it and they get a good deal, well then the banks are usually going to make sure they want to occupy the property for a certain amount of time, and if they can get it for $90,000 for a $150,000 home, then it could be a great deal. But some buyers walk because it takes too long for the banks to answer, and some buyers wait, and sometimes you can get a good deal, and sometimes the property will not end up selling. It will just go into foreclosure because the banks did not want to take a note short of what was owed. They wanted to get their full judgment for the foreclosure. If you have any questions, I know that was a mouthful, please feel free to call me. My number is 505-750-1428, and that's short sales in a nutshell and a mouthful. Thank you.